Hello, Maverick traders. Welcome out to your currency recap for June 9th. Corey here with you. If you have not been attending the midweek, which launched last week, make sure you get in there this week. Ankit does a phenomenal job teaching currencies, highlighting trades. So get in there and get active. We're going to go through meaningful news today. We're going to talk about where the puck is going, right? The great Wayne Gretzky said, I don't skate to where the puck is, I want to go where it's going. We're going to talk about rotations, why we have a little bit more of a risk-on market environment, and what trade setups in crypto or in the FX pairs are standing out to us.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
All right, so let's take a look at markets, see what was shaking out today. Well, a couple of different things stood out. One is the Apple Worldwide Developer Conference. This is where they roll out new products, talk about existing operations and things, and they're rolling out a new operating system for the first time since 2013. It used to be as Apple goes, so goes the market, but there has been some divergence that way. And look, there's other corporations that are as big as Apple now. There's Microsoft and Nvidia that are both in that 3 trillion market cap range. China and the US trade officials are holding talks in London. If you look at market price action, if you look at volatility, certainly the markets are anticipating more good news, further moving along of trade agreements, tariffs, reductions, etc., etc. Now, as we look at price action, this is a classic risk-on day, which is really the trend of the market. So you want to stay long Aussie and Kiwi, and on the short side, you've got to be considering things like Japanese yen, US dollars, those sorts of pairs. That's the trend, and that's also how it was performing today, which was nice. If we look at equities, well, relatively flat. Crypto had a nice day today with a big 2.5% jump. Oil, nice performing day, up 1%. If you break down cryptos individually, it's really Litecoin was the laggard. Everything else in that 3-ish% range. Now, as we look at markets, we'd have to say, well, very bullish, and from a charting perspective, the 20 is above the 50. We've got upward slope in them. You've really gone from what was a bearish market back here in the prior months, and now we've really reversed. 20 crossed above the 50 here. Recent pullbacks have been bought effectively. Even this little triangular pattern has broken out to the upside. Give credit where credit is due. Money's flowing in, and we always say price is truth, and the truth is that the trend is up right now. Now, the volatility index is often referred to as the fear gauge. It tells you how nervous people are, and it has absolutely plunged. So there is not a lot of fear in the market right here, right now. In fact, this decline in the percentage of volatility is a record breaker in terms of percentage decline over that period of time. Generally, usually, when you have a major earthquake, so to speak, there will be some aftershocks. This one really was just sort of an earthquake, and then everything has gone back to where it was before. There were really no aftershocks coming through, and that's weird. To be honest, that technically does not usually happen. When we've seen other times where the VIX spot price has been at 60, you would have a big drop, but then you'd have an aftershock, and then maybe a further drop, and then an aftershock. And so it would be more drawn out, and you'd have more of whatever got us into that mess, some negatives coming out. This one, one could argue was a little bit more man-made, tariff related. It was not something that was just kind of organic from the economy or something of a slowdown. So perhaps markets are just saying, look, it didn't go the way that Trump had planned when he rolled out the tariffs. He threw on delays. He's further negotiating and so on. Maybe it's gone as quick as it came. That certainly seems to be what the markets are pricing in. The economic calendar this week is pretty light. We've got CPI, some inflation gauges on Wednesday here in the US. You've got PPI on Thursday, not as impactful, not watched as closely as PPI. Some consumer sentiment, but this would be a technicals week. This is one where we really don't have to worry as much about the economic events. CPI could be the curveball there, but for the most part, you can just trade the charts. And a lot of people really like that, where we can just focus on the charts. And right now, as you look at velocity, you'd have to say, okay, we're looking, crypto is more of a buy. Bitcoin looks fantastic. Aussie is the best currency with Kiwi in a close second. You've got the Japanese yen as the worst currency. So if we're just matching them up, it would be Aussie yen on the long side. Possibly we would do the New Zealand dollar against the yen. Both of these would be long trades. You'd be buying those pairs. That would get you long the risk on and short the risk off currencies, and really would play to the market velocity. So let's look at a couple of these charts and make sure that we've got the velocity behind it, we've got the trend behind it. If we look at Aussie first, just classic perfect uptrend. We rallied up to this resistance. You can call it a cup and handle, you can call it an ascending triangle, call it what you will. We have continued to break higher. We're above the upward sloping trend line. Trend line here, moving average here on a buy signal, and RSI upward sloping. Every piece of this criteria really looks more like a buy. So Aussie looks like a buy candidate. And again, we'd match that up with the weaker currencies. So look at the Japanese yen, almost the inverse chart. Whether you call this an inverse cup and handle in some way or descending triangle, the same principles apply. Look, downward sloping trend line and moving average on a sell signal, rolling over RSI that has been trending lower. Just looks like more of a classic short. Now, if the yen makes you a little more nervous, US dollar would be one that can be looked at as well as a possible candidate. On crypto, I think Bitcoin is still the best of the best here. We broke out to new highs. Again, upward sloping moving average, buy signal, upward sloping. In this case, breaking out on the RSI. Usually when you first pierce above 70, things skyrocket. This is what I call going into overdrive. So this should be a good signal in the short term. It does mean that you wouldn't want to overstay your welcome, but just as when you first pierce below 30, you can see how it intensified. You might get a really sharp pop here to the upside in Bitcoin. I don't know that it'll happen, but it wouldn't shock me if tomorrow you wake up and Bitcoin's up 3% or something. Just it kind of has, it could be a blow off top. It could be an exhaustive type of move where things run too fast, too hard to the upside in a short period of time. But that's what I'd be watching for, and certainly the strength is there. So we're in a risk on market environment. You want to be long the risk on areas of Aussie, New Zealand dollar, Bitcoin Cash, Bitcoin. You want to be short Japanese yen. Notice short Swiss franc, short US dollar right behind it. These are the three primary risk off currencies. So it is a risk on environment for now in the short term, trading velocity. Hope you enjoyed today's currency recap. Have a great week, everyone. We'll see you next time.